Welcome to the Film Garage 208 podcast. My name is Sarah, and this is Daniel.
Hello.
Hello. Today we have with us Megan and Kiersten from the Maloney team at the Colony First Mortgage.
Yep.
First Colony Mortgage?
You good. Maloney team, First Colony Mortgage.
Maloney team.
Ding,
okay,
ding, ding.
Megan and Kiersten. So
Yes.
great to have you guys in the studio today.
Thank you.
Thank you. So tell us what you guys do.
Do you want to get? She's the
What's the
expert.
synopsis here?
You start, Kiersten, because you're great at this kind of stuff.
Okay.
So
Well,
Both are so humble.
yeah, I know.
we're just going to compliment each other. Tell me I'm pretty.
We just defer to each other. This is how it works. Well, I mean, simply put, we just offer home loan not projects, but products. It's a Monday.
It's a Monday.
It's such
It's
a Monday. Yeah, so we do home loans and things that come in with that as well. It's cash out refinance and reverse mortgages. So that's what we offer as far as products go. Mm-hmm. But collectively, the two of us are a team. So we work under the umbrella of First Colony Mortgage. But then under that, we've formed the Maloney team. So that's where that piece comes in.
Okay.
So, and yeah, that's what we do.
How did you get into the mortgage biz?
Yeah.
So I started doing mortgage loans a long time ago, like almost 12 years ago. I had a dear friend who was a very successful loan officer at Wells Fargo. And she was pregnant and going to go on maternity leave. She's like, I really need an assistant. I need somebody to come do this. I was in a transition in my life that I was looking for something different. And that's how it started. She hired me as her assistant, and 12 years later, I'm still doing home loans. She and I have kind of followed each other to different companies. Her name's Kira. She works at First Colony too. And I just love it. Like, writing mortgage loans seems kind of boring on its face.
Yeah.
I was going to say that.
Yeah.
The name of mortgage loans.
Right.
You said exciting. I was like, I wouldn't have put those two words together.
Yeah, no, it's when you really get into it from the originating side, when you're helping people figure out what they want to do and what they can do, it's like problem solving at its finest. Because you've got to find the right fit. And of course, it's the banking world. So there's a million restrictions and guidelines and they change often. But you have to it's a puzzle. You have to find the right loan for the right time, and then also look at people's like short and long-term goals
For sure.
of what they, if they're buying their first house, is this going to be a house they're going to be in for, a long time, or is it short term? And that you look at that totally differently depending on what their goals are. So that's what makes it exciting, is like connecting with people because it's their house. Like
That sounds more exciting.
yeah. Like when you just say, oh, mortgage loans, there's nothing glamorous or exciting about that on its face. But that's why it's been something that, I've done for a long time. And I think I'll do probably the rest of my life because I love it. It's like, again, problem solving at its finest.
Okay.
So how close are you with clients when you work with them? Do you work with like the realtor or...
Both. So it's kind of twofold. A lot of our clients are direct referrals from real estate agents. So we have a really good relationship with the agents themselves. And then on the flip side of that, with the clients, because it is really like digging in. It gets so personal because people's money is so personal. Like, the stories that I can't tell
Because we're not allowed to.
Literally.
But it's funny, like, I get the divorce stories. I get the my credit is bad because of X, and like all of the horror stories. Yeah. And that's another reason why
it's vulnerable.
Right. Well,
to, like,
and
these
allow
things.
people to be vulnerable and not feel judged of yes,
100%.
everybody's had some really hard times in their lives that's put them in a place where they need to build or dig out. And I feel like a counselor in that way to people. And, Kiersten and I have kind of coined that in the last, so she's been on my team since July
July
of this year. And we've kind of coined that in shifting business to being super relational. Like we want to build these relationships with referral partners, whether they're real estate agents or insurance agents or, you know, anybody else in the financial industry that would send people our way. And also with our clients of like, what's your goals and how do we make this work for you?
Yeah. And we're shifting from sorry.
No, go ahead.
Just kind of in the same vein, like we don't want to be considered loan officers. It's really important that we are recognized as advisors, because you are looking at their finances, you are seeing big picture. And even if, for instance, someone can't get a home loan immediately, we can point them in the direction of how to improve their credit or how to improve their finances so that eventually they can get qualified or become approved for a loan. Yeah. So yeah, it's more of a relational perspective and coming from that direction rather than transactional.
Yeah.
Because it gets personal. It's like going to a doctor. You'd rather get to know your doctor over time rather than just going in and telling.
It's like awkward, like, hey.
Yeah.
Yeah. Yeah.
Because I remember when we bought our house, we weren't really that close with the loan officer, but like my personal feelings towards him were like, this guy is amazing because he was saving us money and looking through for loopholes and kind of trying to like figure out the best situation.
Yeah.
But he was the person we had the least contact with, like in our situation.
Like speaking. Yeah. Speaking.
Yeah. Like, you know, just face to face.
Face to face.
Yeah. But yeah, I remember being like, he was just like a little guardian angel because he was all of a sudden one day you get a call and your loan officer said you're approved. And it was like, I haven't even met you, but great.
Right. There's a lot of work behind the scenes there. Yeah.
Right. We do that a lot too. I can count, like I'm licensed in several different states, Idaho, Utah, Nevada, and Wyoming. Oh, wow. And I've done a lot of business in Nevada, and I can count on one hand the amount of clients that I've met in person for Nevada loans that I've done. And I've done hundreds of Nevada loans. So I get that of being like I'm the gal on the other line of the phone, like on the other side of the phone that's making the wheels turn and get stuff done. But I don't meet a ton of my clients in person. Even Idaho clients, I don't always meet in person, like Idaho Falls people. Because
that's cool that you can regularly get those clients though without having to like seek them.
Right.
You know, like they're
right. And part of that is just the longevity that I have in this business too, because I do have a pretty big database of people that I've worked with. And a lot of my clients are referrals from past clients and from real estate agents. So
comes self-sustaining.
Or you know, building on the relationship that I did build with that one client. Like I have somebody that I closed a refinance on just last week that it's the 5th loan we've done together. So
nice. I think that's really important, having that relationship.
Right.
With our, going back to our real estate, oh my gosh, I just brain farted. I don't even know what I'm saying anymore. I lost my train of thought in the conversation.
You're going to talk about our guardian angel in Hawaii.
Your loan officer.
Our loan officer.
Yeah.
What was I going to say? His name was Rylan. Yeah, what was I?
And he's when it was still East Idaho Credit Union. Is that who it was?
No,
this was in Hawaii.
Oh, gotcha.
Oh, wow.
Oh, Hawaii is a whole nother animal.
And the fact that he was able, in our situation, to like get us the house was actually kind of impressive. It was impressive.
Yeah.
Do all
Because there were other
workarounds to get us that.
There was a lot of competition, so it was
cool. It was a lot.
The fact that he even did it was like, wow, this guy knows his stuff. So I guess on that note, what makes like a really good loan officer? Is it your team that gives you more resources, or is it just time and knowing like the ins and outs of the business, or like?
I think it's a combination of all those things. Like I was saying earlier, I've worked for several different companies, and definitely the back end, like the operations side of the company that you work for, makes a huge difference. Because as a salesperson, like that's basically what our job is on the front end, is sales. To be able to say something and know that it's going to happen means a lot. And I've worked for companies. I mean, the big one that I named before, I won't say it again because I won't do that. But I can count on one hand the amount of purchase loans that I did. I think I did 2 in the time that I was there, because they're just, real estate agents don't want to work with a big bank like that. Their machine moves so slow, and they never meet their timelines. And so I did a ton of refinances when I was there. And with First Colony, it's amazing because I know with certainty that if I say I'm going to meet this timeline, barring anything happening with the property itself or the borrower buys a car or quits their job at the signing table, like I've had that happen once, but it's going to happen. Like I know that the operations team behind me is going to make it happen. So I think it's a combination of knowing what you're doing and knowing like your miracle worker in Hawaii, knowing your stuff and knowing how to make the situation fit the way that the investor wants it to and whoever's going to buy your loan and service it and fit the guidelines, but then also having a great company that you work with that the operations team cares as much as the sales does to make sure the loans close. So,
but she doesn't stop though. Like that's what I think, because she did my loan last year. And we've been friends for like over 10 years. So we've been friends for a long time, but obviously, you know, I went to Megan for my home loan, and I mean, I had some obstacles on my file. There were some things I had to get taken care of, but she just doesn't stop. She finds the solutions before she turns people away. And
That's
what I love is when she's like, if I say yes, I mean yes. And if I say no, I mean no. And that's because she's exhausted, you know, all the solutions. And if it's not going to make sense, she knows why. If it can make sense, she knows why. And I feel like that's the kind of person you want on your side, who just doesn't, oh, well, you know, we've encountered this issue. Sorry, you know, I'm
out of luck.
Yeah.
Sucks.
Might need to go here or talk to so-and-so, or just, you know, the generic, you should probably just improve your credit or whatever. So that's why I like.
It seems like what you're doing should be like the same every time, like the system, right? Like the order that you follow, but obviously it's different because everyone's situation that comes to you is different.
Right.
So the things you have to ask and deal with are always different.
Yeah.
But like, is it a system that's like always the same that you follow, or does it change?
It does change. So the guidelines of the loan programs change a lot. And so, I mean, a typical process is we do an application either online or in person or over the phone. And we have to go through an automated underwriting system. So that's a computer algorithm that says like, yep, you check the boxes of how like this on a risk, looking at it from a risk and the guidelines, you fit. Great, ding. That can be very different depending on people's circumstance. And then it goes to an actual person, an underwriter, with all the documents, and they double check that it fits. So in theory, it should be pretty like the same.
Cut and paste.
Yes, if you fit this, then this works. But there's lots of different ways that you can kind of bend the information or to make it work the way you want it to, like
or interpret.
And that's where you come in knowing those things.
Yeah. It's like,
is there like a website you go to check these updates, or do you just?
There's a ton of them and they're so boring and dry, but it's like, you gotta do it.
Or books. We have books that we have that the government issues.
Oh, really? Mm-hmm. Is it like a yearly thing that they?
Yeah, it depends. The guidelines don't change, like just parts of certain ones change. Like COVID added a bunch of different regulations that changed.
Yeah.
Is it easy to miss those things? Like if you don't check a website for a couple days, do you miss?
So the automated underwriting is typically updated. So it will catch some things, but it can be like there's lots of things. This is always a
So they always
research.
like factor that into the algorithm.
Yes. There's always a research level of writing a loan too. That's why it helps to have a person who is looking at it. And our underwriters will catch it, our ops team will catch it, but we try to do that on the front side because it really sucks when you're like a week out from closing and you missed a condition, like a thing that could be a problem. And then you have to go back to your borrower and say, well, shoot, here we are. And your debt to income ratio is too high. We were approved. Now we're not. Here's the things that we need to do. And that's a great thing about First Colony too, is they are like awesome at problem solving too.
Yeah.
Okay, we can't go this direction with this loan, but if we do these things, we can go this way. So, that's another great thing that I love about the company that I work for now
Yeah.
is I love the problem solving aspect of it. And that seems to be a company wide thing of like making sure that we're doing the best we can to close loans and get people into houses.
Yeah.
So
is this company just Idaho based, or where is this?
no, so we are in almost all 50 states
wow.
now.
Okay.
And our corporate office is in Orem, Utah.
Okay.
So it is a family owned company. It opened in the early 80s, I think 83, and has just expanded.
Okay.
They've grown a ton in the last 5 years.
Okay.
I've been with First Colony 4 years, and they've grown a lot in the last 5. But they're in almost all 50 states now.
Cool.
So.
Yeah.
So earlier you had mentioned about like the relationship with your customer and trying to like shift that. Mm-hmm. So is this like a big corporation? Like, is your team like stuck to like their guidelines from like everyone in Orem, Utah? Or are you able to like kind of shift and make your own business and like have some new business venture ideas and kind of pursue those?
So it is banking, so it's super regulated on what we can and can't do.
Yeah.
But we do, so we work under the umbrella of First Colony Mortgage, but we basically, I mean, we're commission only salespeople. So we're doing this.
Okay.
Yes, we can, we've taken a shift in making sure that it's super relational, but that also has been a shift that First Colony is making too. So in 2020 and 2021, it was like insanity. You were just a clerk. Like there were so many people. We didn't try and do a ton of the hard deals because interest rates were stupid low, like in the 2s and 3s. And there were a ton of refinances. It was craziness of people trying to buy houses. And it was huge. You did not have to know a ton to be a loan officer. You just had to
just do
cram
it,
it
get
through.
it done.
Get it done, cram it through fast as you can.
Yeah.
And there were so many leads coming in because interest rates were so low. And so it was just a different animal. And now that interest rates are close to 8 is where we are from
Yay.
two.
That's scary.
So it's been, in my opinion, a great shift. I've really enjoyed calming down and digging back into the basics of it. But a lot of people have gotten out of the business because it's like the phone's not ringing. You have to build your own relationships with your clients and with referral partners to make sure that you can continue to go.
That makes sense.
So
that makes sense. I remember what I was starting to say earlier. So we got an email from our real estate agent. So I guess it's not technically what you guys are doing, real estate, but it could be a good partnership idea. It was, they invite us every year to their yearly Christmas just gathering.
Yeah.
And they have a Christmas photo set up. So the families can just come in and take a photo, and they come and get
Ooh,
a
that's an
pie
awesome
or
idea.
something.
Yeah.
Right.
And so it's open to everyone you sold a home to, everyone you did all these little things to, and it's just free.
Yeah.
And it's that's a great idea because I don't know. It's a good relationship builder, I would think.
Totally.
Right? Yeah.
I mean, it's things like that, like Megan was saying, going back to the basics. I grew up taking art, and I loved art and everything. And what was so fascinating to me about art was I just thought you just start drawing stuff on a page, you just start sketching. But no, there is some rigor to it. There's there's a reason behind it. There's a philosophy, there's an approach. That's why there's always different schools of art or schools of thought associated with art. And so you had to learn the basics in order to start then even breaking those rules. And that's what was so interesting and fascinating to me about art and finding that creative side is before you can get ultra creative and start kind of coloring outside the lines, you have to learn the rules first. Mm-hmm. Otherwise it's just sloppy. And then I think at that point, people don't even take you seriously. Mm-hmm. So, with Megan and why I think we're just so drawn to each other to form this team was she has this incredible background. She's established people know her. She has a great reputation. And then I was able to come in with more of like the marketing and the creative, and Megan was like, hey, you know, like, let's form this team because she can offer this foundation, but then my job is to come in and help her grow. And together we grow and build on what we've been able to come together.
So you've been like the marketing kind of part of this, pushing it.
That's why we're sitting here. I can't say that I would have been
like,
on a podcast, just me.
Yeah.
So starting this business here, like down to the very, very basics, like did you buy the building?
So we work
Where did you start?
We work for First Colony.
Okay.
So we don't have those
I didn't know how
overhead
they like
costs.
Gotcha.
Right. So First Colony, we're a branch underneath First Colony. So yeah, because I don't want to. I already
That's
have
a
to
lot
know
extra.
I already have to know so many things to do this job.
Was
I
that
don't want to
branch
do all
already?
those extra.
That's right. It was already open because you said the other lady brought you in.
So we First Colony started in Idaho Falls and Pocatello in Southeast Idaho. I worked for a different large mortgage company called Guild Mortgage for several years before that. And a regional manager for Guild had gone to First Colony and he recruited us.
Okay.
After his year non-compete was over. So, and we shifted to First Colony 4 years ago. So there was a whole group of us. There were 3 loan officers in Idaho Falls and 5 in Pocatello that our 2 branches came to First Colony.
So how big is your team now?
Like Maloney team is just the two of us.
It's just Kira and I,
Gotcha.
Or Kiersten.
I said Kira because I was thinking of Kira.
No, you're fine.
Yeah, just Kiersten and I are on the Maloney team, but in Idaho Falls and Pocatello, it's about the same. Like we've kept our team smaller, but or our groups a little bit smaller, but we do a lot of volume in Southeast Idaho.
Yeah. So we're kind of like real estate team, you know, like if you see like the blah, blah, blah team, but they're part of like Berkshire Hathaway or whatever. So that's same idea, but there's a lot of autonomy. There's a lot of leeway that they give us. And like, I built a website just for our team. You know, we've done our own marketing just for our team.
But we have to check all of that with compliance because it's all federally regulated.
Yeah.
And that's the great part about working for a company like First Colony is we've got a lawyer and we've got 2 compliance officers and all the people who are going to make sure that we don't go to jail.
And that works with your own little team too.
Yeah.
That's really cool.
Yeah. So they kind of take that risk out for us.
That's
you know,
cool.
that it's like, we don't have to worry about the rent. We don't have to worry about the lawyer. We don't have to worry about compliance. All that's taken care of, but we get all the benefit of having that distance, the autonomy of like a small business. So
that's cool.
And we came from entrepreneurial families and backgrounds.
Yeah, I want to
things.
know more about you guys. Where did you grow up around here? Where did you go to school?
You want to start?
Yeah, so I grew up, I was born in Colorado.
Oh, okay.
Raised in Phoenix, and then I wound up going to university in Los Angeles, and my degree's in entrepreneurship.
Okay.
So that was like one of the first degrees that were offered in the country for entrepreneurship.
Oh, wow.
Yeah. So my dad, my parents, both of them, since before I was born, they had various kinds of businesses. My dad has numerous patents. Like 40, 50 patents.
Oh, wow.
Now.
That's so cool.
Yeah, he's a cool
What are
guy.
a couple of the big ones?
He invented the predecessor to high definition television back in the early 80s.
Wow.
Yeah.
It's like electronics. He's smart.
Yeah. Oh yeah, he's brilliant.
Yeah.
One of the smartest people you'll ever meet.
Yeah, don't tell him that though, because I'm teasing.
He knows.
Yeah,
he's well aware.
Whether you tell him or not,
he'll tell you.
Yeah, he'll tell you. But he started off like he worked on scoreboards in Colorado and McNichol Sports Arena. It's kind of a long story, but they wanted a fall guy because their displays weren't working. So they just hired my dad as this young kid. He was just going to be the scapegoat for why
it's not working.
Yeah, like it's not working. Blame this kid. And my dad, being my dad, figured out how to make it work. And then he got into displays. And he was asked to help with the scoreboard in the 76 Olympics. So Nadia Comaneci's perfect 10 was because he went in and changed the 9.9 to a 10 because he figured out how to digitize that. Mm-hmm. And then he came back and he was into displays. He sold space around the arena to Coke and Pepsi. Like he loves telling the story about how he had Coke and Pepsi pitting against each other to buy advertising
Ad
space.
Yeah.
And he was one of the first to do that. And then he's like, well, I can make these displays brighter and better for my advertisers. So then that just sent him down this road.
Good for him.
So he did optical engineering.
Such a niche market.
Yeah. Oh gosh. Well, and back in the other day, the thought hit me. I remember being about, 4 or 5, and he had the first 1 million pixel display, flat, I guess by the definition back in the 80s. He had it on his building, the top of his building, because he wanted to see how bright it was at night. And I'm just thinking, like, how many people can have those significant kind of...
You're looking into the future.
I know. He came home one day. He's like, guess what? Screens are going to be flat. Like you'll be able to hang them on your wall, like pictures. And we're like, yeah, right. And then here we are.
That's so funny.
So yeah.
Wow.
So I mean, it's like, so I've seen that, and with entrepreneurship, there's feast and famine, and people, he had, unfortunately, some people that were greedy and tried to steal the technology, and we had to defend the patents. And that took all of our money and resources. So we had to start over, and we wound up in Phoenix. And then he invented like this whole other way to like purify water. And we started a bottled water company.
Wow.
Here in Idaho Falls. And so it's just been,
He's always got those gears rolling.
he will never retire. It's just like, he'll just never retire.
I'll keep going forever.
Yeah.
Yeah. That's good.
Yeah. We want people like him, you know? So these past few weeks, he filed 2 new patents for 2 new inventions. Like
That's so
Wow.
fun.
Yeah. Yeah.
Wow. So that definitely instilled these like entrepreneurial traits in
Yes.
you. You've been seeing this
Yeah.
in your living room growing up.
Yeah.
Yeah.
It's what I've known. And
That's really cool.
Do you have any patents?
not yet. Although I've been thinking about a few things. I wake up in these like weird between waking up and being asleep, like weird things that pop in your head. But, like websites, I've had some ideas for services on websites and things like that. So when I have some time,
we need to capitalize on that. So my background in entrepreneurship is way less glamorous than like my parents own a water well drilling company, and
Did you live here?
so my dad is from Nebraska, and he's a 4th generation water well driller. So
Another niche market.
yes, yep.
Okay.
And another thing that it's like very technical, but you don't think about digging a hole as
Yeah.
being like crazy technical, but it is.
Yeah. There's a why.
yeah.
And so, not nearly as glamorous as like looking into the future. Like, no, legitimately digging holes.
You could look into the
Pipes them up.
ground.
Right. How deep does this hole need to go?
Yeah.
But,
It was probably more consistent though. You probably had
no. So my parents, like a similar story. We've talked about it. So my dad was super, super successful in his early, like in his 20s and 30s, and then lost everything and moved to, followed my mom back to Idaho and worked for someone else until he bought another well drilling company. So, like the feast and famine definitely is rung true in my family's life.
Is it just economic things that made it take a downturn?
Oh no, you should always pay your taxes. And if you
stuff
don't,
like
that's a real big problem.
I can imagine.
Right. Pay your taxes.
That's the moral of the story.
Yes. The one thing that never changes, taxges. Taxes. Always pay your taxes.
death and taxes, right?
Yes.
They will
This is
haunt you
Yeah.
forever.
Yes. So, word to the wise, lessons learned from my parents' success and demise in that arena.
But I mean, I feel like with entrepreneurship and running your own business, like regardless, I think it's easy to have to go through these moments of peaks and valleys. Even, I don't know, I just think that's the nature of just having your own business, and even in the nature of what we do. You just kind of have to,
Ride the wave.
you have to just be able to ride the wave. And eventually you hope that lessens over time.
right.
Lands where you want to be.
Yeah.
So what kinds of things have you guys done using social media to
Promote your
expand?
business.
Yeah.
I've I've really relied heavily like on Instagram, which to me was so funny when I first started. My natural inclination was I thought Facebook would have been the more robust social media platform, but it turned out Facebook was a great place, which I thought was funny because, mortgages, I don't know. I just thought it would be more informative, but the images and the visuals that make sense and can convey what I want make a lot of sense for Instagram and the kind of audience that we're looking to.
Yeah.
Because you have to consider your audience. And at Facebook, will target a little bit of that, but Instagram just seems to be where we landed naturally. And so, videos on, I don't know, even doing live videos at open houses adds value to the realtor that we're partnering with. Again, building that relationship with that realtor.
Yeah.
Demonstrating to them that we can do something for them, promote the open house while we're there.
Yeah.
But also, it adds content. So those are that's the kind of thing that I've actually found a lot of success in.
Yeah.
And then I manage like the Maloney team page, and then so that's what we've been finding works. But
yeah.
What's like your message on social media? I mean, you mentioned you want to have a closer relationship. So like, what are people, what's the hurdle that people have when trying to find you? Like, what do you,
Yeah.
what's your clickbait for them,
Information. I mean, I really think information is power, especially because the market, people want to know what interest rates are doing. It's just been, not tumultuous, but a little volatile.
Oh, it's been so volatile. I mean,
yeah.
The change in the rate environment happened so quickly.
Is that the thing we need to be most worried about, the interest rate?
No, not necessarily.
Are there other factors just as scary?
I think there's things that mitigate it rather than scarier.
Right.
To be honest.
It definitely is like on top of mind for most people because it's such a dramatic change. Like we literally went from 3% interest rates to 7 in less than a year.
Literally.
And it was wild. And
literally
there were people who were looking for houses for a couple of months and it was a crazy market. And they went from being qualified to not qualified because rates changed and the payment was more expensive. So
right.
It definitely is like feels front and center, but there are lots of ways that you can look at that a little bit differently. And that's where Kiersten and I are trying to dig in on the information of, there's permanent buy down. So you can pay a little bit extra upfront to buy your rate down. There's temporary buy downs that are super cool.
Yeah.
They've always been a thing, but they haven't been part of, what's been in the offering for people for a long time. Not in my career, really, have I ever done a temporary buy down until now. And what that means is like there's a 2-1 buy down. So if your interest rate is at 7.875 and you do a 2-1 buy down, you're basically paying the difference of the principal and interest portion of the payment. You ask the seller to pay that on your behalf. So in your first year of mortgage payments, your payments at a 5.875 interest rate is what you're paying. And then in your second year, you're at a 6.875 interest rate. And then in the third year is where it goes to the fixed 7.875. And you can refinance any time in that. So if interest rates come down and you want to get into a lower interest rate and payment, you can. But it just helps with affordability up front that in your first year
get in there.
and your second year, the payment's lower.
Interesting.
So that has not been a strategy that people have used because interest rates were so low. It wasn't something like it didn't make any sense to ask the seller to pay that difference. But now it's the difference in between a house selling or not. So sellers are willing to put,
like lose some more
depending
money
on the purchase price, that can be, upwards of $10,000, $15,000, $20,000, that the seller is contributing to the buyer. But it also is the difference in $600 in a mortgage payment can be
monthly,
in between the 2% lower interest rate.
Which can be huge.
Right.
Yeah.
Right.
And again, like even though it's within the rigidity of guidelines and things like that and banking, it's something kind of we happened on just by talking to clients and feeling what they are, addressing their needs. And obviously affordability at this point is a concern for a majority of Americans, just given the current economic environment anyhow. So yeah, I mean, it's offering creative solutions that address people's problems. And so I think that's another way that we find that, I think that gives us a competitive edge.
Yeah.
But also just just coming up with ways, finding new ways to address problems
For sure.
people have.
Yeah,
really
I know
important.
the TikToks that always get me when we're scrolling. I know when we were looking to buy our house.
Yeah.
Because that was it. We were first time home buyers.
Right.
So
Yeah.
it was like, I don't know. I
Right,
don't
and
know
it's
anything.
terrifying. You're asking to borrow
And, like,
hundreds of
if we're in
thousands of
Hawaii,
dollars.
it's like,
Yeah.
oh my God.
That you're telling yourself, I can pay this back, but really, you're like,
Right.
I've never had this money in my account in my life.
Right,
Yeah.
right.
Yeah.
Sure, I can do this.
Yeah. You're at the table like, yeah, this is fine.
Uh-huh.
Yeah.
Literally, and then COVID shuts down.
Yeah, for us,
4
we
days
signed our
later.
papers on a Wednesday, and that Friday COVID hit.
We shut
and
down.
Oh my
like the whole
gosh.
Hawaii shut down, and we were
Right.
just like,
Out of work for 2 months.
how do we?
Guys.
We have a mortgage to pay now. Like
know.
that.
Right.
We were like, what happens if you don't pay your mortgage on Google? And it was like, oh, I get arrested. Okay. Or foreclosed
There's the
or something.
moratorium.
Not
Yeah.
arrested. Not arrested.
Yeah.
That's that real boring document, the deed of trust. It says all of the things
the
that will
things.
Yeah.
happen. But
Yeah.
nobody
Enough to-
reads it. You
enough to
sign
scare
it.
me. Yeah, I was
I
like,
signed it and
Yeah.
moved along. But yeah, no, it was just looking at all of the TikTok videos. It'd be people be like, just so you know, like this is what you can do in the market, and like
Yeah.
talking
Right.
about like the FHA loans and like just
Yeah.
those little education things that I had no idea about
Yeah.
at all. And like even with our coworkers, like we'd been the first ones.
the
In
FHA
our
loan was
group.
cool.
Like
Yeah.
so
Kinda
no
s-
one had experience with like buying a home or
Right.
like loans or just it's just like you just don't know anything. You're so
Right.
young.
It's scary.
They could have
Yeah.
told me anything in that room when we walked in. Like, this is how it is. And
Like,
I'm
I
like,
guess
okay.
so.
Done. Where do I sign?
I don't know.
I'm getting a house because of you.
I
Great.
guess so.
And I have to find like we say things to clients and they're probably, and I'm thinking, that was me not that long ago. They're probably wondering where this is coming from. Like, why is it that their debt to income ratio has to be at a certain level? Why is it that we're asking for all these documents? We really start to dig. And I think sometimes it's good to put ourselves in your place and remind ourselves of what it's like to be in that position. Because I just got my license back in June.
Okay.
So, I mean, I'm a baby to all of this, but I mean, Megan's taught me so much. I felt like I've learned so much. It's been such a steep learning curve because it is genuinely very interesting to me. But my first house I bought last year, and I was on that same side of like, okay, like I remember asking me, Megan, like, is this all we have to pay?
Yeah. This is what I
Are
got
there
into the
any
pot.
hidden fees or
Right,
anything? And now I know that you can't do that legally. You cannot be placed like hiding fees and playing those games that you would like if you were, I don't know. I'm trying to think
When
of it.
buying a house, they can't add any extra things.
Yeah, they can't be like,
We can't throw in a car warranty at the tail end and charge you X amount of
an extra
dollars.
$200
Yeah.
actually.
Like all these disclosures are required. So yeah, I mean, it's funny to think of on that side of things, but then that's why we're here. We want to be resources to anybody who buys a home, even after they buy a house. So if they are having those snags in life, which happens, just give us a call. But to answer like your question too, I feel like interest rates should be important and we should be thinking about them. But I think ultimately it's just looking at your monthly payments, like regardless of what the interest rates are doing, regardless of how much the house costs. To me, if those monthly payments make sense to you and fit within your budget and you're comfortable, that's what you should be looking at. And obviously taking into consideration the home and its appreciation and things like that. But if you're going to shop your loans, I feel like shop your mortgage officer or in our case advisor, because we're the ones that I feel like that's where the greatest variances in your experience can occur.
From your loan officer or an advisor?
Yeah.
Okay.
So I feel like, I mean, generally, you're going to encounter the same rates really no matter where you are.
Yeah.
There might be different fees or costs associated with that loan. And that's important to look at as well. But if you have a good loan officer, loan advisor, they'll disclose those things to you and they'll show you how to walk through those documents so you do understand. But not everyone's going to take the time to do that. But Megan we had people come into our offices and we sit down, we go over those documents. She goes to closings and describes what's happening at the closing, so you know what's happening.
That's cool.
And not everyone does that. So to me, I think if you're going to shop anything, shop your loan officer in addition to the product.
Yeah, because it isn't just wholly about rate. Because you can look at, I mean, even the example that I gave of a temporary buy down, not every loan officer is going to offer that as a solution. Because they may not understand it, because it hasn't been part of our world that we've utilized in a long time. So not everyone's showing that as an option or an opportunity.
It's like, because all of the new upcoming changes, it can be easy to forget the old things that have been put in place.
Right. Well, and I mean, just like any other type of business, there's going to be things that are more popular at certain times than others just because of the demand. So, and we definitely are in a place where affordability is such a big deal because home prices are more expensive. Interest rates are higher.
Everything
is expensive. Right. So that's what, what Kiersten said, making sure that the monthly payment is comfortable and makes sense. We're doing that not only in just people who are buying houses, but people who already own a house. And they have, we have a client that he has his house paid off, and he has some credit card debt and a car loan, and we can put a mortgage back on his house at a lower interest rate than his car is, at a lower interest rate than any of his credit cards. And a lower monthly payment, even including his taxes and insurance into his monthly payment. And yes, that's great to have a paid off house, but you have, in this particular instance, he's got $500,000 of liquidity that he can't touch.
100%.
And all of these other debts. So most people think, like, why would you ever want to put a mortgage back on your house? If it changes your life and you're getting rid of, $1,700, $1,800 worth of monthly debt,
Worth it.
and you go into a $900 payment, and you can
It's
put
so
money in
smart.
savings from your liquidity. I mean, there's just a lot of different ways.
Things to think about.
Right.
And he's going to invest that. He wants to sit on it and just have that liquidity in his bank. And if he wants to invest or has these opportunities, he can.
Awesome.
I mean, he's really excited.
That's
and we're
super
excited.
smart.
Yeah.
Because it's like
I mean,
the small guys.
We did that at one point. We had a loan in Hawaii that we both had some bills, and we took out a loan from
Right.
the
Just
credit
something else
union
with different
that
interest.
paid off both those loans instantly. Now we're paying the credit union, but it's way lower. Way lower.
Yeah.
Like,
That's so
Whereas like we
smart to
couldn't
do.
have gotten out of that credit card debt unless we had that
but it was
loan.
hard to get to that point to
Right.
get the loan from the bank because you had to make enough money to,
Right.
so
You know,
it was
it's
like
also
that balance is probably not like in your situation. Options for everyone are just so different.
But it is like having that conversation of
You would never know. that you
Right.
do that.
No one tells you that.
that
yeah.
people don't understand, like, yes, you have this, and there's lots of people who have a ton of equity in their houses right now that have a lot of, they have student loan debts. Student loans are due again. We all have to pay our stinking student loans.
Just don't look. Just don't look. Yeah, it doesn't.
Do look, because if you don't pay them, that's a really big problem.
taxes.
Yeah. They're government loans, so pay attention to them, even if you keep deferring them for the rest of your life.
That was a test to see how good of a loan officer you are. Passed.
Yeah, thanks. I'm glad I passed. But we have, I have been doing quite a few refinances, cash out refinances of people that were my clients 4 years ago, 5 years ago, that have stupid low interest rates on their mortgages, but they have these other debts and this liquidity in their house. Like, they bought their house in 2015 and for $150,000, and now it's
Sitting on
worth
so much money.
$400,000. And they have these other debts, and it's like feels like a dagger in the heart to pay off that loan that's at a
I don't know.
3% interest rate, but it really isn't, because we're paying off all of these other debts and they have a comparable payment, or they're saving themselves thousands of dollars in monthly payments and interest.
Yeah.
So,
And they only make one payment too, generally.
Or it's for all the things.
Yeah. I mean, there's student loans I lost track of because I'm like, wait, who am I supposed to be paying now? Like, who's servicing this loan now?
Right.
And so
I got an email like a couple months ago saying all my loans were transferred to a new
Yeah.
Mohila took them all.
Was that?
Probably. I bet you.
I was just like, and it was like, you got to contact them and figure this out. I was like, what do you mean? I don't.
Right.
Yeah.
You're like,
What do
wait
you
a
mean?
second. Go back to just zero payment.
Yeah.
And zero interest. Let's do
Yeah.
that again. I thought Joe Biden was going to forgive all these. Wait a second.
I know
We
you
just got our
tried.
hopes up.
Poor guy.
Right.
But yeah, I mean, I love that sort of thing, like being a resource, offering these like creative, out of the box, as far as out of the box can be in our line of work.
Yeah.
And then like, it's funny. I can see us creating these little trends or ripple effects even in our area. Cause we sent like a 2-1 buy down scenario to a realtor and she put it like on her Instagram. And then like a couple days later, she's like, I'm getting all these other loan officers giving me 2-1 buy down scenarios. And I'm like, where did that come from? Like,
Right.
we started that, but it's neat. That's when like, those are the little markers to me of like, okay, we're starting to move the dial a little bit in our direct market. In the community. So it's neat because it just reminds me that, it's beneficial and obviously information people want, and it's starting to create a little bit of dialogue around that subject. So
It's like something, I mean, I'm interested in it and I know I can't buy a house right now, but I still want to know. I just want to,
it's good to know.
Yeah.
Information's so powerful.
Yeah. One thing kind of off topic, do they do leaseholds in Idaho?
Oh yeah.
Are you familiar with leaseholds?
Yes, I am. And not very often.
So from my understanding, it's something where you pay basically a mortgage rate so that you can just pay less, like than paying rent, as if it was like a year to year, but you don't get to keep the house at the end.
So it was like the state, the government owned it.
So
These were like all over Hawaii.
okay,
Tons of
so
them.
Really?
Yeah.
leaseholds, there's not very many in Idaho, and in Hawaii there's a ton because
The government land.
it's government land, and then it's also like owned by
It's like
the
Hawaiian
Hawaiian
sanctioned.
people.
Yeah.
So in Idaho, we do have a couple of leasehold places, and they're really hard to get loans on. It's mostly on Indian
say
reservations.
reservations.
That would make sense.
Because the tribe owns the land.
Yeah.
You buy the house. So you still get a traditional mortgage on the house itself. You own the house, but you are basically renting the land that the house is on for X amount of time. So it's built into so if you guys bought a Hawaiian leasehold property, did you or did you own?
No.
No,
Our
but looking
real estate agent
around,
was like,
you would
no
see
leaseholds.
you'd see an awesome deal, and you were like,
Like, why is
let's
it
get
so
it, and
cheap?
then
Right.
leasehold.
So
It'd be
the
like 20, 30,
difference,
gotta be out.
Yeah, the difference in a leasehold and buying the house and the land too. That's the difference. Is when you're buying like a leasehold property, you really are only purchasing the home. You have no ownership in the land itself.
Yeah. And then you have to give it back afterwards too, the house.
So what kind of people is that ideal for?
Probably people that only
Military,
are going to be there for
maybe?
so
Yeah, I'm like,
long.
that's-
I would
it's
imagine.
so random.
I mean, more so people who like on the reservation, if you're part of the tribe, you have some kind of ownership in the land too. And really it's just demographically like what makes sense. Cause in Hawaii, that's going to make sense for people who want to buy specific properties. They're still going to do it.
Interesting, because it'd be like some random properties, or it'd be like a penthouse in a high rise. Like,
Right.
interesting.
Right. And they renew the leasehold.
Yeah, and
it's
it, like,
just
would
it's just the
redo.
way that
Yeah.
the owner of the land, the tribe, or the Hawaiian
Yeah.
people, how they continue to have ownership in the land and make money off of the
Yeah.
land.
Pretty interesting.
So
It's different.
I mean, it's kind of you're buying part of their investment.
Yeah.
And you have
Sure.
to pay towards it. But they do renew. So it's not like you like lose your ownership in the property that you bought.
Yeah.
You just have to continue to renew the
Renew it.
lease
Keep going.
part of it.
Yeah, that's crazy.
Keep renting your home.
Right.
Yeah.
Which is wild. But most people, it's really difficult to, most mortgage companies won't do a leasehold
Yeah. Ours was like,
property
no.
on the reservation. We can, but
Well,
Because
it's
even their leaseholds were like 8 years. So
Or
I
it'd
mean,
be like the leasehold ends in 2030 or 2025.
right, where you have to renew.
can you build equity doing that?
I don't think.
Yeah, because you still own the land. I mean, you still own the
home.
property itself, the house, the condo, the whatever.
Yeah.
It's just the land
you don't
that
own.
you don't own.
Because I could see why that would make sense, like short term, like almost like kind of people that would go into an ARM or something.
Like if you knew you weren't going to buy a house and had to rent,
Well,
Yeah.
but like wanted
that's
to pay
why
a
it's
little
like
less.
I was concerned
Yeah.
if you would buy the house, you'd be like, all right, I'll just do the really cheap and I'll buy it and I'll do it right now. But then like, what if you want to move in 2 years? Now you have to try and resell your leasehold.
Yeah, is that hard to
And
sell?
nobody's going to want to
And
buy
they
your
have it
leasehold
built
again.
in,
Yeah.
like especially in Hawaii,
Yeah.
I'm sure that's way more common than here. Like it is very difficult to sell a property that's on a leasehold in Idaho. But in places where it's common,
Yeah.
it's not. Like they're used to it.
Yeah.
So
Yeah, I've just never really understood that one, and I've always
Yeah.
wanted.
So
So-
it's a random thing.
yeah, so
Yeah.
you own, it's kind of like I'm trying to think of a good thing to it.
I almost feel like the only thing I can think of is like companies that like buy, like have their building on rented land and they're allowed to like use the resources on that land.
Leasing the land.
Yeah.
I'm just trying to think of another business thing to compare it to. I would think of it as like a franchise. Like you
Okay.
are doing your
Okay.
own thing with your
Sure.
company and
Okay.
but you buy into the franchise itself and you pay those fees. So that would be like an easy comparison of
makes
something
sense.
that makes
Yeah.
more
Yeah.
sense
Makes
because
sense,
it's
yeah.
more common for people to wrap their mind around.
Yeah.
Like you buy a piece of this company, you're doing the same thing. Like you don't own, if you buy a McDonald's franchise, you don't own McDonald's.
Yeah, or
but
the
you
land.
own the company, you own your own piece of that.
Yeah.
And you just continue to renew with
Okay.
McDonald's. So
I've heard they
the
own their
same with the
land.
leasehold.
McDonald's. I've heard they own the land and you are just franchising or leasing the building on it.
No way.
Right, like
they
their
already
real, their
have
real
it.
estate is the majority of their money. I think it's like makes them more money than the food it
I've
does.
heard that.
Yeah.
I've
Right.
heard
It
that.
wouldn't surprise me.
Interesting.
Yeah.
Wouldn't surprise me at
Yeah.
all.
I've heard that they do that. I've heard they're more
That
like
could be bullshit. I'm just saying, but I agree with you that I have heard
Right.
I
that.
think I've heard that subject. I mean, I haven't cared enough to like really look into it, but I think that's kind of the same idea as like, then they get the benefit of ownership of the land, but then also in addition, the franchise on top of it.
Maybe in other places I wouldn't say that's a good idea, but that's a great idea for Hawaii.
Yeah.
They need to keep some ownership.
Right.
Yeah.
Everyone's trying to take a piece of that pie.
Right.
Yes.
Yeah.
Oprah, ugh, you're taking the whole island.
Literally.
Right? It's gonna be Oprah and Mark
beef with
Zuckerberg
Oprah.
and
Mark
Kauai, and
Right,
that's it.
right.
We
Yeah,
got beef.
2 people on the whole island.
Literally
Yeah.
though.
So, with the social media, we kind of touched on it earlier, but do you guys collaborate with other people to get out there?
So
more
Kiersten's really our driving force of social media. I'm not great at it. I'm learning and growing and knowing that's a thing that I need to build into my business.
Unavoidable.
Yes.
Yeah.
So
Yeah.
Kiersten's our driving force. And yes, we are going to, we already have, like she was saying earlier, we'll do lives from open houses. And we want to do some, like Kiersten did a blog spot
Yeah.
on a local realtor that we do a lot of business with, and we want to do some videos with her and, be that information from both sides of it of, we help with the money piece, but on the real estate side, like what you should be looking for
Yeah.
and the pitfalls and, your real estate agent, you have a ton of contact with because you spend a lot of time with them depending on how quickly you find a house.
Yeah.
So that's something that we really want to dig into is doing some more informational things with real estate agents that we
sure.
partner with.
Yeah.
So,
Yeah.
Those relationships with
Yeah.
them.
So, because like not everyone has a mentor, right? Or I guess if they come in on a team, there's probably going to be
Right.
someone helping them. But that's definitely a plus with you guys having
right.
that.
Yeah. I mean, we're kind of each other's mentor, I guess, if you want to look at it. Like,
Right. She's
have your
giving me the flip
benefits.
side of the marketing stuff. So
I mean, and Megan, she's already had this pipeline built. And so when we discuss this coming together, I mean, she wants to grow and I want to be able to be part of that growth. So, I mean, that's really where the collaboration came in. But
sure.
I want to learn mortgages because I want to contribute. That's another thing too, is I just want to be able to contribute as far as being able to write mortgages and understand mortgages in addition to the marketing. And then I want to share with her what I know about marketing
Yeah.
so that she can have the benefit of that as
grow.
well, so that she can grow.
Yeah.
And so, we have goals between the two of us. And I think we're like getting really close to like achieving those goals. So it's great to see that, because then once we hit that, I think we can just hit the next plateau.
Yeah.
Not that plateaus are great, but I
the
just
next
see them in
step.
steps. Yeah.
For sure. Step by step.
Yeah.
Because I didn't realize that, I guess you can't like shop for a loan officer, advisor, because like ours was just handed to us. Like our real estate agent was just like, here's who we're using. Like this is the person.
Yeah.
So that's good to know that like I could have gone and found someone else if I wanted to, or like that education to,
Right.
yeah. And like you don't have
And
to
we're not
stick
afraid.
with one person.
We're not afraid of people shopping us. Like I'm really not. Like I do try to keep a pulse on
What does that look like if someone's like shopping you though?
They'll tell you.
Yeah, they tell you.
Like just feeling around.
This,
or
you know, XYZ place told me this rate, or I looked at Rocket Mortgage online. Don't ever use Rocket Mortgage. Their process is hard. But they have like their online rates are, you know, can look so appealing. And oftentimes it's like just digging in. I'm like,
But not truly that way.
sometimes it's too good to be true. If they're offering you
It's always too good to be true.
Right. Not always. Not always. But we also have the integrity to say like that's not too good to be true. Like, and here's why. Walk,
That's good.
You know, run, don't walk.
Yeah.
Go that direction. Like I'm not gonna like hold someone to use me for a loan if there's an option somewhere else that makes more sense for them right then, because that is a big part of the relationship building. Even if I don't write your loan up front, when you're ready to refinance or you have other questions, if I answered those questions that someone else didn't, even though they gave you a better deal, you're going to think of me first.
No, it's a great point.
Oh, yeah.
So
That's a good point.
Yeah.
I like that.
Yeah. And it's when people shop around, I think, well, we can see if they're shopping around, because if we pull their credit.
Oh, and it pops up on like all their little
Yeah.
takes of. No, yeah, it's interesting because when we bought our home and stuff, I knew nothing.
right.
Yeah.
I just literally know
don't.
nothing. So how it even happened with us looking and getting a house was, I think I was on Zillow one day and I randomly was like, you know what? I'm just gonna hit like inquire, and then like a real estate agent called me and she was like, hey, and I'm like, I literally don't know anything. I don't even know why I hit like inquire. I don't know why I did that. And so it led us to going into their office, and it like got so serious so fast. They're like, all right, time to look at your paperwork and like what can we do? And I'm like, I just hit inquire. I didn't like, wait a second. I didn't realize that this was so serious.
You're like, wow, this got
And
serious
that
fast.
is not a unique experience, because most first-time home buyers, it's a very similar thing of like, I need a new place to be. And
Yeah, literally like rent or like it was going to be coming up. We're going to need to move or do something else.
Yes.
And it was just like, oh my God.
And then you jump into it and realize it's not nearly as hard as you thought it was.
That's also it.
Right.
It was true.
Yeah.
But like that's how it was like all of our coworkers.
Because they were good. So I imagine working with you guys, it would be good. But if you didn't have a Rocket Mortgage.
Right. If you only push inquire and then you plug your information in, that's a totally different experience than what the two of you had, where you went and met with someone, you had got a great real estate agent who linked you up with a miracle worker that it seems like they magic fairy in the background doing all the things, but they formulated it in a way that it made sense for you guys. And that's what we're really trying to do too, is like, it is so intimidating, and just hitting inquire is no big deal. But then you start digging into it when someone who knows what they're doing can point it out to you that this is really not that hard. It does not have to be that hard.
Yeah.
You don't have to have 20% down to buy a house. You don't.
Yeah.
You need between, you know, in Idaho, actually, like Hawaii is different. I don't know what their, Hawaii is its own animal. But in Idaho, you can buy a house with as little as 0.5% down. So on a $300,000 house, that's $1,500.
Holy cow.
Most people can come up with $1,500.
Yeah.
I think the FHA loan in Hawaii was like 3.5.
So it still is 3.5%,
yeah.
but there are down payment assistance programs that are available in Idaho. So you can have two loans. So you do an FHA loan with 3.5% down, but you can do 3% or even 3.5%, the full 3.5% of your down payment in a second mortgage. So Idaho, we're super, super lucky. Like I said earlier, I'm licensed in several different states. And Idaho has the best first-time home buyer programs, has the best down payment assistance programs in comparison to the other states that I've worked in.
So that's gone once you bought a home, right? I'm excluded from any first-time home buyer.
So is there
Am I
second
allowed?
home buyer?
So Idaho also is super awesome in that way that you do not have to be a first-time home buyer to use down payment assistance.
Okay.
So you may be able to buy a house.
What if you don't own that home anymore? Because we don't own the Hawaii
sold
home.
our house.
So once you're,
I wish.
So a first-time home buyer in any state is if you've owned a property within the last 3 years. So once you hit the 3-year mark, you're a first-time home buyer again.
So we're close.
So
Okay.
Getting there.
From when you first bought it.
from when you sold it.
From when you sold it, 3 years after you sold it. Okay.
That's cool to know.
Okay. So we can start over with
the
first-time home buyer
definition of
again.
first-time home buyer
Okay.
is not what people actually think.
Because I saw a TikTok of that and I was like, wait a second.
Yeah.
I could do it again, but I didn't know that.
Right. And you don't even, in Idaho, you don't even have to be a first-time home buyer to use down payment assistance. So you can, you can shift from one property to another and use the awesome Idaho programs that are available that have stupid low rates in comparison to other programs sometimes.
So if people are going to their banks, as maybe someone would just right off the bat, not knowing anything, go to their bank and say, I need a loan, they get denied. Like, should they come to you right away?
Yes.
You know, is that what
Like, that's not
people
a
need?
no.
Like,
That's not a no. Yeah. Because
Just-
especially a bank. And that's why,
Interesting.
when I was talking earlier that I started at a big bank, that's not their niche of doing purchases and making sure that, all of the options available to people are there because most big banks don't do the housing programs because they don't pay as much on
It's
the
not
back
like the main
end.
thing.
Right.
Yeah.
So, if you've talked to a bank or a credit union and they say, no, you don't fit our mold exactly how we want it, absolutely talk to a mortgage company. Like we're technically a mortgage banker. Again, federally regulated. There's all the rules that we have to follow. And then there's mortgage brokers who are a little different. But we're a mortgage banker. So the difference in between a big bank and a mortgage banker is we can sell our loans to a bunch of different places. So we do all the housing. We have a ton of different investors that we can sell the loans to. We fund them in-house. So first you originate your loan with First Colony Mortgage, the Megan Maloney team, either Kiersten or Megan. And then First Colony will fund it. And then we sell it on the secondary market to like Idaho Housing or any of the other big servicing companies, depending on what loan type you did. So we have that opportunity and we don't have all the extra overlays that big banks do. So we sell directly to Fannie Mae, Freddie Mac, FHA, Ginnie Mae, which is VA loans, other government loans. So we don't have extra guidelines, extra hoops that people have to jump through like a big bank does. So oftentimes we can do loans that banks
don't be discouraged.
Yeah.
Right.
Yeah.
And just because you get told no, even by me, I always say, not yet. Like, here's what you would have to do. Like, if somebody doesn't credit qualify or their debt to income ratio is too high, like if you do, like, I'll give you a game plan of how to get there. So, or if you're newly self-employed and you need 2 years worth of tax returns to be able to qualify for a traditional mortgage. So,
And it's free.
Yeah.
It's free to shop. I mean, it's free to talk to different.
reach out.
Yeah.
Right.
And so, I mean, and I don't think we're too.
Why not then?
Yeah. I mean, and
Right.
it's kind of nice. People get some credit advice or financial advice. Not that we're financial advisors, but that's just the nature of, hey, if you could, hit these milestones or fix these things, then you can qualify for a loan. And it gives people good information, but also, I mean, it's free information, and we get so busy that we can't. Not that we don't want to follow up, but I mean, we will follow up with people and, and make sure that they're in a place that they want to be, but we're not pushy and we're not going to like force these
Keep
like,
calling you back.
yeah, like, hello,
Right.
are you there? Yeah. I mean, we get so busy ourselves.
Yeah.
And it's obviously not something you can force. So I think people are afraid, like, if I talk to them, then they have my number. And even that's regulated. Like we can't call you a bunch. Like it's not like you're going to be on I don't know, spammed by me and Megan, at 2 a.m. Like that's just, we're just too busy anyway. But it's a great way for you to just kind of get an idea of where you're at. If it makes sense, and if it doesn't, then just follow back up with us, or we'll follow up with you. It's very casual. It's not high pressure.
It's almost like if you don't even need a loan, we should be coming to you to do that.
Right. I can tell you.
My life is a mess. Will you please look at this?
Look at it.
Well,
It's like therapy.
I'm not qualified in the therapy part, but I can look at your credit and give you so many tips and tricks.
I've learned a bunch of things from her just doing it. So it's a great thing. And I mean, again, like bringing down those myths of like, oh, I switched the job, so because I switched the job, I can't get a house. Well, you might be able to, especially if it's in the nature of what you were doing before.
Okay.
Right. Just taking the fear out of it, of the unknown. And it sounds like you guys had an awesome experience in Hawaii of like, we had no idea.
Like
we
it was
just
just
hit
so
one
easy
button,
and nice.
inquire, and now you've like opened these doors to us that we had no idea were even
And I
available.
remember telling our friends too that
all
were
our
our same age
coworkers.
or even older, and they were like, "What?
It was like we were teaching
that's what
everything.
happens. Like, that's how easy it was." And,
It doesn't have to be that hard. Right.
yeah.
Right.
And all
And
these
FHA
people
loans
call
are
you.
amazing.
Yeah.
Unless they're not right for you, and then they're not. But,
Exactly.
Yeah.
Exactly.
but it's finding somebody who will tell you that.
I think seeing how much we would have been paying monthly if it wasn't an FHA loan and like a traditional 10 to 15% down. I think that was a tough pill to swallow. Just seeing the numbers, like,
Yeah.
Right.
But I mean, there was just no
Right.
way we
You
could
gotta
have
do
come
it.
up
But
with
it's
them.
but it's a springboard. Like that's what people don't understand is there's these stepping stones of how you can get there. Like, and you don't always have to start with the dream. Like that's what we've, especially since affordability has been so huge, like buy a house. So you are building equity. Then that house is saving the money for your next house.
Yes.
That's so important.
Because it's still an appreciating market. Is it appreciating at the pace that it was? No, but that was,
a freak
that
circumstance
was its
there.
own thing, but it's still an appreciating asset.
Yep.
Yeah.
And
And it builds your net worth. I mean,
Right.
on paper, you're worth more.
true.
And there's benefits associated with that. So I don't know. I mean, it's a good conversation to have. And if anything, if you find people like Megan or myself, we're happy to just answer those questions so that it kind of gives you a compass on where you might want to take your finances in your future, because this could totally change your future.
Yeah. 100%.
Absolutely. It's life changing
Yeah.
if it works.
Yeah.
For sure.
Yeah.
and most of the time where there's a will, there's a way. You can,
Yep.
it may not be today that you get qualified for a loan and can buy a house, right on offer tomorrow, but that doesn't mean that we can't give you a path.
For sure. For sure. Well,
Okay, so
thank you so much for all that information.
Yeah. I
Thanks for
obviously
coming out
like
today.
it. I talk about it so much. I could just keep going.
Yeah, I was going to ask for like your takeaway or something you'd give advice for to someone, but I was going to say the advice for anyone listening is just to go to you.
Right.
Don't listen to
advice.
anything
Questions.
you've
This is
heard.
the
Just
advice.
go there for
Yeah.
yourself.
Yeah. Ask questions and jump in because
figure it out.
it isn't always as daunting as it seems. 99% of the time, it is not. Like people can make these moves even if they think that they maybe can't.
And even if they meet with you, you won't hunt them down.
Right. Yeah. I'm not going to, I will have all of your information if you do an application.
So you could hunt them if you wanted to.
Right. I could, but I won't.
That's enough, as long as they know that.
Right.
That's all they need to know.
You'll probably be on our newsletter list that Kiersten's created, but there's an unsubscribe if you really don't like us.
Right.
Well, and if there is anything I could say to like take away too, it's like similar to what Megan's saying is like, if you read something, if you come across a TikTok or whatever, don't think it automatically applies to you. If you come in, it can vary. Going back to even what we were saying earlier, like, there's all these steps and these procedures you go through, but it can take us down a myriad of paths. So, just having those conversations that's tailored to your lifestyle, to your current financial standing, where you want to go. Those things can change, and don't feel like you're stuck. Like, don't feel like the interest rates now are what you're going to have to be stuck in. There are so many different solutions and opportunities that just even going down a path to explore to see if it makes sense, I think is just totally worth it.
Yeah, I like that.
Yeah, good stuff.
From our firsthand experience, I agree. You need to just go and inquire and do it.
Yeah.
Ask
You just gotta rip the
questions.
Band-Aid off because it's like you don't know until you do it.
Yeah.
Right.
Yeah.
Yeah. And it was reassuring seeing exactly what you had to do, because they did that to us. There was a
Right.
few
Like
things we
step by
didn't check
step
the
by
marks for,
step.
and they were like, well, this
Do this,
bare
this, and
minimum,
this.
you have to
Right.
hit this, and then we'll talk. And it was like,
All right.
okay, let's go
Cool.
figure that out. Like,
Yeah.
At least
And
it gave
sometimes
you
you
a
just
way
need
to
a plan,
go.
right?
Yeah.
And then
Like
also
skip dinner twice a week and we're good.
Right,
Like we
done.
can make
Yes.
these payments.
right,
It's good. It's
It's
fasting. We
I
call
don't
it
need lunch
fasting.
this month.
Yeah.
What?
right. Intermittent fasting is the newest thing. Skipping breakfast, cool.
And for your marriage, like I know for my husband and I, that was actually oddly like cathartic and team building for he and I, because he had different opinions on things. I had different opinions, and we had to learn how to compromise and have like really frank discussions too, that I don't think we would have been having. So yeah, it's a good thing to go down. I
Right.
feel
When
like.
everyone's asking for the detailed life questions and
Yeah.
numbers, you can't lie.
No.
Right.
You can't lie.
You can, but
stretch
we'll
the truth
find
a little
it,
bit.
and then it messes everything up. So don't lie.
Right? Yeah.
Okay, well, thank you so much for coming on our
Thank
podcast
you.
today.
Thanks for having us. This
Yeah.
has
Yes,
been
thank
awesome.
you.
It's been great to meet you. So make sure and check out First Colony Mortgage, the Maloney team,
Yes.
for your home loan needs.
Yeah.
What's your website?
HomeLoansWeb.com.
HomeLoansWeb.com.
Okay,
Yep.
great.
Or you can Google
thank
us.
you. Perfect.
Yeah.
Okay.
Okay.
Thanks, guys.
Thanks, you
Bye,
guys.
everyone.
Goodbye.